We have a lot to talk about today. We have a 0.003 penny stock that has distribution agreements with 10 out of the top 25 pharmacies in the US, including Rite Aid Pharmacy, CVS Pharmacy, Walgreens, and many more. And they also have had their products in Walmarts as well. This is one that is growing very rapidly, trading at 0.003, like I said, with 2022 net revenues of $15.3 million, gross profit of $9 million, and a net profit of $5.6 million, and a positive EBITDA of 36%. They are growing revenues Q over Q, rapidly expanding. So they just had a very good, very progressive and profitable year, and they are expecting very, very rapid growth in 2023. We will also be discussing a penny stock that hasn't diluted in well over a year. They haven't diluted a single share in well over a year. Actually, their outstanding shares have went down. They are under 50 million in total outstanding shares, a very small float of 20 million, a small market cap of $9 million. And for their 2022 revenue, they hit $24.4 million, 80% above their projected revenues. They are growing very fast. This is one that has a lot of potential, and they are aiming to do at least $100 million in revenue for 2023. We'll be discussing multiple other penny stocks in this video. You're going to want to stick around for the entire video. I'm going to jump right into it. I'm not going to waste your time. Make sure to put notifications on and definitely hit the thumbs up for this video. Really helps me out. First company we're going to talk about, they operate as a niche high-end luxury goods retailer, helping interested consumers obtain rare luxury items that may not otherwise be reliably available due to the nature of the luxury retail marketplace. The company focuses its efforts primarily within the fine timepiece and jewelry segments, both on the wholesale and B2C business to consumer basis. They also have a subsidiary that operates in the jewelry marketplace with a strategic focus on the rapidly growing lab-grown diamond market. They also have a very big investment in Aether Diamonds, which was founded in 2020 as the world's first and only captured carbon lab-grown diamond producer. The ticker MASN is currently trading at 0.0073, 160 million outstanding shares with 500 million authorized shares. So they do have room for dilution, but a pretty good share structure, especially for an OTC company. Market cap of $1.2 million, a float of 75 million. They do have $5 million in total liabilities. They did $17.6 million in revenue for 2022, do $3.7 million in 2022 Q3 revenue, and they did lose $1 million in net profit. However, their margins did get a lot better compared to the previous quarters. OS increased around 40 million shares in the last 6 months, which isn't that much for a company that actually has revenue, and for an OTC penny stock in general. They aren't diluting that many shares. 40 million shares in the last 6 months isn't that much. Their 52-week low is 0.0047, and they are actually trading at just near their 52-week high, which was 0.008. Like I said, they're trading at 0.0073. I actually called this penny stock before anybody else on YouTube, back when it was only getting around 300,000 max in total volume, or around 300,000 volume. And I believe the last trading day last week, it did $25 million in total volume. So there are eyes on it right now. This video was made back in November of 2022. The stock was trading at 0.0036. It is now trading at 0.0073. So it has more than doubled. MASN, Mason Lux Inc., trading at 0.003 with a market cap of only 491,000, guys. And Mason Lux reports best ever annual revenues of approximately $17.6 million for 2022, as compared to approximately $5.2 million for 2021, an increase of over 300%. And they're poised for rapid expansion in 2023, when they really just have to work on their margins. And if they do that and they keep growing, there is a big opportunity for this company. They have a very select few locations that actually have their products. So if they actually have a lot of different connections. I've done research and I've seen this. They have a lot of different connections and partnerships that could be expanded. So that's something to definitely look at. For Q4 of 2022, this company did $2.3 million in total revenue. Very bad margins, with a net loss of $1.4 million. So Q3, they did just under $4 million in revenue and they only lost just under $1 million. So that's why I said Q3 revenues really showed a lot of improvements with their margins and their revenue, but their revenue is still consistently going up, even though it wasn't as good as Q3's revenue. So their margins really have to go up. This is one I really wouldn't invest in right now until I see more improvement. More consistent improvement, which they have had consistent improvement, I'm not going to lie, with their revenues, but they need better margins. With a market cap of $1.2 million, it's still, this is one you definitely have to watch, put on your watch list, because they are making progress. Not only that, they are not diluting that many shares. So this is one that has a chance to become profitable at some point. Will they do it? I'm not really sure. Looking at the last week, they went from 0.0028 all the way up to a high of 0.008. Currently trading at 0.0073. Now, I'll be honest with you guys, with OTC companies and penny stocks, or let's just say OTC stocks that are like, sub penny, stuff like that, the chart doesn't really mean much at all. Now, you can look for good entry points, look at support and resistance, but that is the farthest I would really go with OTC companies like this, because the chart isn't ever going to really have a consistent pattern. Like, with real stocks we're talking about, they're not going to have a consistent pattern to study. Stocks purely move, they're pump and dump, they move off catalysts. Also, you need to look at their 52-week high, their 52-week low, and look at stuff like this. If they just had a big 150% run, obviously there's a good chance that people are going to take their profit and dump. That's what a lot of people do on OTC stocks. They don't really keep their shares for that long. They don't really go for long-term investments in almost every case. Something else that's probably the most important thing you need to look at is how often they are diluting, who owns, what kind of lenders do they have that currently own toxic notes, because there are going to be preferred shares that can be converted into common stock at some point with these toxic lend holders, and a lot of them are very toxic. So you have to look at, do they have revenue? How much cash are they actually burning? Because some profitable companies are still burning more cash than they make, even if they are profitable. So you got to look at that as well. Look at how much volume they have, because a lot of these have to have volume to move, because they have very bad share structures as well. Is ticker INND, Interscope Hearing, trading at 0.0033, which is currently near their 52-week low of 0.0031, 52-week high of 3 cents. Had their financials come out. So for their full year 2022 financial highlights, they did a net revenue of $15.3 million, gross profit of just over $9 million, net profit of $5.6 million, positive EBITDA of 36%. This is an over-the-counter hearing aid brand. This is actually a good market to get into. Right now, there is demand for their products because the FDA actually did have a rule come out, or a bill passed. So the FDA actually changed where you do not need a prescription or anything like that in order to get a hearing aid. You can actually buy them over the counter. Whenever this happened, there has been a bigger demand and more competition for hearing aids, and they are trying to take over this market. And they currently have distribution agreements with 10 out of the top 25 pharmacies in the US, including Rite Aid, CVS, Walgreens, had their products in Walmart, and much more. Okay, so the reason I'm covering this stock is because their revenues have consistently went up. As you can see, they only did $400,000 in Q1 of 2022, just under $7 million in Q2, and $6.5 million in Q3 of 2022. And their margins are still looking very good. As you can see, when they made $6.5 million, $3.6 million of that was in net income. And it does look like Q4, they did not make as much, but they still had a good year, and they think that 2023 will be an even bigger year. So this is one we have to watch, but I will tell you why I will never touch this company, or I won't touch it right now. Even though they are profitable, they are still burning through too much cash. They have compensation that I do not agree with for a few $1 million, stuff like that. So right now they are diluting a lot. 1 year ago, they had 7.3 billion outstanding shares. This has already increased by over 1 billion in 1 year, currently sitting at 8.6 billion outstanding shares with 15 billion authorized shares. So they are diluting. They have room for more dilution. They haven't really slowed down on this. And they have a horrible share structure. This is why I would not invest in this company right now. But I am going over them because they do have a real product. They have very good distribution agreements, done very well in distribution with their products and marketing with their products. Their revenue is continuously expanding and doesn't seem to be slowing down anytime soon, although their last quarter was a little lower. They had a really good year in 2022, and they think they'll have a bigger year in 2023. So they have a real product. Looks like there's a demand for it, and they have their products in very big name retailers. So this is why I'm covering them. They do have potential, but they really would have to do a RS or stop diluting completely for me to even consider investing in this company. DRCR, Dear Cashmere Holdings, they're actually going to have a ticker name change very soon. They're becoming fully SEC reporting with audited financials. This is something to look forward to. Trading at 0.019. I do believe they did around $24 million in Q4, and they have a 52-week low of 10 cents, 52-week high of 64 cents. We have actually made a lot of money swing trading this one. If you have been a subscriber of mine for a while, this one has went up and down, and we have benefited very well. So they haven't diluted a single share in well over a year, but they did just recently raise their authorized shares to 500 million. But this does not mean they are still going to dilute a single share, as they put out a shareholder letter that I will go over explaining this. They are forecasting 100 million revenue for 2023, no convertible notes or debt. So they have a very clean balance sheet. Market cap only $9 million, authorized shares 500 million shares, which we will go over. Outstanding shares 47 million. Some of those are currently locked up. A float of 20.7 million. They pretty much have no liabilities to worry about. 855,000 in total liabilities, but they have a lot of revenue coming in. They are profitable. This isn't something they have to worry about. So this is very good for the company. They put a shareholder letter out. So they're saying a lot of people were concerned about the AS going up to 500 million shares. People thought dilution might happen, which it may happen, but I don't think it will, because they say soon after taking over the company in 2021, they already plan to increase their AS from 100 million to 500 million. They say this was done due to the fact that the authorized shares, first issued shares, offered very little room for future funding or acquisitions. Therefore, in order to clean up and grow the company towards an uplisting, it was important to administratively address this. And so basically, they're saying that the formality of increasing the AS is not new, as it was completed in 2021. Only now the public records have been updated as they prepare to file to become fully reporting, and there is no new event or reason for the increase in authorized shares, as it remains business as usual for our company. So they're saying right now they don't even plan to dilute shares, but they do have room if they do want to go for an acquisition or need funding in the future. But they basically are saying they aren't really planning to dilute as of now. They say the company is now extremely profitable and growing towards 100 million in revenue this year. This is one that I am confident in investing in. I try to tell you guys the stocks that I'm actually, currently trying to trade. So out of all the stocks I went over, this is one of them. So out of all the stocks I've went over today, this is one of them. They say Swifty Global displayed impressive Q4 results, recording close to 24.4 million in revenue and an EBITDA, which left the industry in awe. They're saying they're very profitable. They're basically saying they have very good margins and are profitable. Swifty Global has since been fully audited and has its sights on filing its S1 by the end of Q1 2023. So they will also change the company's name and ticker. This is an esports gambling and fintech/crypto company. They have their own software development team that has been in the industry for decades, of actually be able to license out their platforms and potentially revenue share with some very big name gambling casinos as well. Just now reached 1,000 subscribers last video. Really appreciate all you legends liking, comment, and just watching my videos in general, and I will see you guys very soon.